welcome to the Xplor Show. Thank you guys so much for listening in. Today, we've got an awesome young entrepreneur, Zach Molzer, here out of Kansas City, actually. He is in the commercial real estate world. He is focusing mainly on multifamily, but getting into all different aspects of commercial real estate. Zach, welcome to the show, man.
Thanks, guys. Yeah, seriously, thank you guys so much for having me. Really looking forward to this.
Yeah, absolutely. So, Zach, tell us. We actually got together last week and we're chatting a little bit and talked about a few projects you guys are working on, and you guys focus specifically in the multifamily value add market. Is that accurate?
Yeah. A lot of people throw the word value add around, painting walls, maybe adding new appliances and stuff. And I always find it really funny because the projects that we've done, they're real value add, in my opinion. We do conversion plays, but right now we're doing an independent living facility conversion where the only thing that's staying is the foundation. We're ripping out walls, doing all the demo work, new floors, cabinets, countertops, common area spaces. I mean, it's true value add, in my opinion, but teach their own.
So you guys are going in and completely kind of gutting a property and redoing the entire property to make it essentially brand new for the end users. Is that accurate?
100%. Yeah. That's traditionally what we've done. Obviously, we look at all different types of deals, stabilized deals, value add. We look at everything, but we own a construction company, and so that's the biggest play for us, is being able to do things a little bit cheaper than other groups can do, since we GC all of our own work. And yeah, I mean, completely demoing everything and having it be a brand new building for these tenants and residents.
Yeah, it makes a big difference. And when tenants move in, they feel happy, like they have a brand new place. It seems like they take a lot better care of it. If they go into a product that's already just kind of, you've painted over outlets or switches, and you've just kind of thrown stuff in there, they're going to be less likely to take care of that property because they kind of vibe off of what that landlord has done with the property. So if you go into a new property, it is much more likely that they are going to take care of that better than if they go into something that's just been, like you said earlier, paint slapped on the walls and maybe replaced or just clean the carpet. Yeah, exactly. And I think that's really changed over the past 5 years or so. You still have some of these slumlord landlord deals out there that people are just kind of piecing stuff together. But for the most part, I think as an industry, we've really come in and so much capital has been put in. And most people are making a great product or redoing products and putting out new product by rehabbing it completely versus just slapping paint and carpet in every unit and going again. Would you agree with that?
For sure. Yeah, 100%. And now, granted, on the flip side, we like buying those deals of the people that aren't necessarily the best at doing those renovations, and do kind of cut corners. Those are the best deals for us because then we see the opportunity to go in and really add the value once we maximize it and get out. So finding those deals is awesome. Not necessarily the best for the residents and tenants that currently live there, but hopefully by the end of it, by the time we get out, it's now a clean, safe, and affordable place to live.
Yeah, exactly. And you guys are in a couple different markets. So you're based here in Kansas City, but you guys focus mainly kind of in the Midwest, the Tulsa, Oklahoma City, Kansas City market. Is that right?
Yeah, so we have a couple properties in Tulsa, one in Stillwater, Joplin, Missouri. Been a great market for us. Wish we could buy everything there. Wichita, Kansas. So it's your traditional tertiary markets and areas that we think are going to continue to grow. C plus, B minus tenant base, not the cream of the crop. But again, your teachers, nurses, construction workers, your hardworking individuals are people that are our goals to live in our apartments with kids.
What's a standard deal look like? So let's talk about some numbers, kind of what you guys are looking for. What's your niche in this product? Because there are so many investors out here, so many people we bring in and we say, hey, these individuals are multifamily investors that go in, they do value add properties, or they're developing new multifamily. What's your guys' niche? Why are you different, or how are you setting yourselves apart from the rest of the players in the field?
100%. At the end of the day, we're not institutional. We have just about $100 million of assets under management, family-owned company. So I'm the only non-family member. So it's owned by Gary, Spencer, and Chandler Culler. Three great guys, great family. And I think the biggest selling point for investors is that it is that vibe, but it's a sense of community. We genuinely care for all of our investors. It's not a dollar figure. The other aspect is that we are very heavily capitalized in terms of what we put into the deals. So our money is very hard alongside of our investors. We send out full reports, just like, I assume everyone else does. We look at lots of deals. And the other biggest part is we look at a lot of deals, and we don't do that many. Traditionally, we've closed 2, maybe 3 a year. Not to say that we couldn't close more. It's just we want to make sure that it's a solid deal for our investors. We target a 12 to 18% annualized return.
18, that's really good.
Historically, we've done a lot better than that, but
wow.
The 12 to 18% is what we target it. Obviously, we go in, we try to maximize the value and get out when we see. Our strategy is always going to be fixed debt. A lot of people in the coming months, years, or that weren't on fixed debt are maybe going to be in for an awakening.
As rates have gone up so high and they're going to start, their notes are starting to balloon. That's going to be an interesting. It's kind of been the topic for the media for the past 12 to 18 months, right?
Yeah, it's crazy.
We're starting to see it a little bit in the multifamily and the office space. I don't know that it's come to complete fruition yet. I think there is still some more damage to be done.
Yeah, 100%. Sellers aren't necessarily in that state yet, in my opinion, that state of urgency. They're not comfortable by any means, but they're not in the state of, okay, I need to sell or I'm going to default. I don't think they're there yet. And I think that as soon as we do get there, we'll start to see cap rates starting to slowly go up and up again, hopefully. Obviously, I don't want anyone to go under, but if that's just what's going to happen. There's going to be some people that aren't going to get through this, and hopefully we can be there to piggyback and take those properties to the next level where they should be.
Well, it screams opportunity, right? And the ones that are properly in place to pick up on that opportunity are going to be in a good spot going forward. Unfortunately,
management's going to be huge.
Yeah, absolutely. And we've seen a lot of people get into this industry just hoping to make a quick buck. And for the past couple of years, you've been able to do that. I mean, you could make big mistakes and big errors on projects, yet the market just kept climbing. So people were escaping these deals that really they should have lost their ass on. But the reality is the market kept going up and cap rates kept getting tighter and tighter and tighter. So they actually ended up making money. Well, now they think they're the best known in the space, maybe. So they're going out and they're leveraging even harder and into more deals. And those are the ones that we've got to be somewhat keeping an eye on and saying, okay, what's going to happen with these? Actually, Zach, I'm curious. There's a property here in Kansas City, right off the plaza, 45th in Bellefontaine or 43rd in Bellefontaine, right there off the plaza, apartment complex. They tore down all those houses and they put this apartment complex up, but it stopped construction, I think. Are you familiar with what I'm talking about?
I don't think so. I mean, I can definitely look into that. That's weird. They stopped. They paused construction.
Well, yeah, it looks like they've just completely stopped. I don't know. Maybe they just stopped it on the amenities. But if you drive down 43rd to Bellefontaine, you'll see it. I mean, it's on the west side of the road there, and the grass is growing up like crazy. And it just looks like, I mean, it's not finished. I can tell you that right now because there's windows that are missing and some other stuff. So I don't know if they ran out of money or what.
There's been a lot of people that have been getting underwater with the rise of construction costs. There's a bunch of different groups and things out there. I mean, even for us, we've done, obviously, like I said, a lot of different value add plays over the past couple of years. And even we've had challenges with rising construction costs. So maybe it's that. I'll definitely drive by that today though. That's interesting.
Yeah, you should. And rising costs has been a huge issue, especially 2021, 2022. And it's still right now. I mean, people are still getting delayed materials, everything else. Well, I was talking to a developer yesterday or the day before, and he was telling me that on a couple of their projects, their quotes for windows raised almost 70%. From when they got quoted to when it actually got here and was being shipped out to them, to where instead of the windows being $100,000 for their apartment complex, they were going to be $170,000 to $180,000. Nobody is going to honor that quote. Nobody is that crazy, right? Well, as a developer, they're the ones that have to take the hit on that. Or as the individual like yourselves who are going in and completely remodeling these properties, you guys couldn't have projected that these things would have taken 6 months, 9 months, 12 months to come in, these materials. And at the same time, every month, those materials are rising so heavily in cost to where they're tripling or doubling sometimes, or doubling or tripling sometimes. Who's going to eat that cost, right?
Yeah. And the other aspect of it is the delays even are, in my opinion, a more important part. The $80,000 increase in the cost is not good. I mean, that sucks. But the biggest part is that, let's say it takes 6 more months. I mean, 6 months of carry cost is probably more than $80,000. So the carry cost on delay like that is huge and astronomical. And it basically takes the deal from being able to pencil to not. All that is eating into your returns and your investor returns. And that's not what you want to do. But
most
again,
people put
you
6 to 12 months of carry cost, and that's it on these projects. So when they're having to do that just in the construction phase, that's a huge problem.
Yes, for sure. Especially now, interest rates are as high as they are.
Yeah, and then you put on top of that, there's a lot of logistical issues as well. So you get delayed on one material. Well, now everybody is delayed. So guys are going to leave the job site, and then to get them back can be a nightmare, right? Because they're not going to leave the job they're on. So now you have to get back in line and wait for these subs to get back out there. So it just causes all types of problems, from interest rates, materials have gone up, labor shortages, all of that has just bottlenecked.
Except with the window example, I mean, you can't open up a building without windows.
Yep. Well, yeah, and you really can't do any finishes or start anything inside without getting those things in, or at least something figured out for it. So it makes it very hard to move forward on these projects. So when it comes to you guys, what kind of investors are you guys looking for? So say I wanted to invest in a fund, or how could I get into some of these different projects that you guys are working on?
Yeah. So we take both accredited and non-accredited investors, and minimum check size is around 50 grand. We have some wiggle room depending on certain situations. We want all individuals to be able to get into our deals. It traditionally started out with just them, just the family, open it up to more family friends. And now obviously we're growing. That's why they brought me on. So I head up our capital raising and acquisitions. So finding deals and then helping raise money. Yeah, I mean, basically how it works is I sit down with potential investors, show them kind of what our track record is, what we've done. It resonates well with people. And then at the end, I ask if they want to see emails, get on our email list for when we have future deals. So we don't raise a fund. We do it deal by deal basis. We don't ever want to feel like we have to spend someone's money. We want them to be fully vested and be able to vet the actual deal that they're going to be putting their hard-earned money into. Be able to know, hey, this is the exact land, or this is the exact building that you own a portion of, right? So we send that out, and investors typically have a limited amount of time to be able to get into the deals, just because, I mean, obviously there's a great demand for what we're providing for investors, right? We closed a deal in March. We raised 4.2 million in 3 days. And
wow.
We had some investors that were like, hey, what's going on? And we were like, we didn't know we didn't know we was going to be that quick. But it's just
a great problem to have.
Great, exactly. And that's another area that I want to take advantage of in this space. That's awesome. Is our ability to raise capital is awesome, and I think that speaks for our group track record, our group itself, and other people wanting to get into our deals. Is the fact that there is such a good need for us and people wanting to get in. That obviously speaks high volume to what Chandler, Spencer, and Gary have built thus far, and what I hope to continue to be a part of for many, many years to come.
No, I love that. And I'm curious, so transaction volume is down significantly. I think CBRE recently put out a report. They're seeing transaction volume between 2022 and 2023 down like 50 to 70%, depending on where you're at in the country, I believe. On the multifamily space, which is absolutely crazy. Now, at the same time, multifamily has run so hard for the last several years. So we expected it to pull back a little bit, but cut in half plus is significant. What are you guys sitting in your seat and where you guys are at? Are you guys seeing this affecting you and your ability to find deals at all? Or are you just kind of being patient and thinking, hey, this is actually great for us because maybe there are going to be some opportunities that pop up here pretty quickly?
Yeah, I mean, both aspects of that. Obviously, deal flow slowed down. I would say deal flow in the sense of deals that pencil. It hasn't slowed down in terms of the amount of deals that I've seen and getting sent. It's just the amount of deals that pencil and actually work. That's why the transaction's down. But the deal flow, in my opinion, is about par. Maybe a little down, but not a whole lot. So we're taking advantage of that in two different ways. The first way is focusing a lot and more heavily on the current assets that we own. Right. So making sure that our management is up to par and in place to the highest standards, making sure that all of our properties are completely stabilized. We're maximizing the value. We're getting quality, good paying tenants in there. that's one area we're focusing on. Another area that I'm focusing on is getting out and networking with people, right? If deals aren't going to pencil and I can do back of the napkin math in 10 minutes and understand that it's not going to work for us, that's great. I want to go out there and meet and connect with as many individuals like yourself that I possibly can for when the time comes of the market gets more traditional and more historically back to quote unquote normal. The other aspect of it is harder to make a deal pencil right now, but we're a firm believer that now is a great time to buy if the deal does pencil. If you can make a deal pencil where interest rates are at right now, I'm not a guesser. I'm not in the gambling world, but I feel pretty confident that interest rates will move down over the next couple of years. So if you can make the deal pencil right now, well, I think you're going to be setting yourself up and putting yourself in a pretty good spot in the future. Again, you just don't want to buy. For us, we want to go in meeting at least our preferred return to investors, which it's pretty hard to find a stabilized deal right now that you can do that. I mean, you're talking, we need to go in right now at around maybe 6.5 to 7.5 cap, and that's just not easy to find right now. So
yeah, you've got a lot of delusional
like us, we're trying to find different ways to find those. You know, again, the independent living facility conversion that we're doing, we looked at a couple hotel conversions. Obviously, off-market properties are the best way to find those things.
Yeah, we've got a lot of delusional sellers still in the market right now that think the cap rates and the sale prices are still the same as they were in mid to late 2021 and into 2022, and they just aren't.
It's crazy.
They've come way down. I mean, cap rates have almost doubled from what we were seeing at the peak of the market. I mean, we were seeing 3.5, 4.5 caps. If you're not getting closer to 7 cap right now, I just don't know how you can make a deal pencil.
Well, especially with all the properties that we're looking at are C+, B- properties, and it just makes no sense of how they're a 5 cap, because 3-4 years ago they weren't selling for anything lower than an 8 cap, right? Yep. I mean, it's just how it was, and interest rates were obviously lower than they are now. So again, like I said at the beginning, I think it's just going to take some time for sellers to feel the pressure on them, feel that heat of if they are in a pickle. And hopefully that time comes sooner rather than later, so we can pick up some good quality deals that we can in turn make a solid return for our investors.
Yeah, no, I love it. And you brought up a really good point, and something that not a lot of people talk about, but it sounds like you guys are kind of shifting, right? So instead of, hey, let's go find all these deals, obviously we want to continue to build this deal pipeline. But the reality is we've been in such a fast-paced market for the past 5 years or so, let's say. All right. And what's happened is a lot of people have got sloppy, or it's been okay if we didn't get this apartment complex completely full, because as long as it's pretty full, we're in good shape. We can cover our debt. Well, how about we take a step back at this point and say, hey, actually, let's clean up everything. Let's get our properties completely filled up. Did we miss some stuff on the management side or make some errors on, could we get better on the marketing or building our client service sector of our business versus we need new deals. We need new deals. We need new deals. That's all everybody's been doing for the past 5 years. And now it's kind of time. Hey, let's slow down a little bit. Let's clean up and let's maximize everything that we have in our portfolio. And at the same time, we can be looking for these deals. But this is a great time to really step back, look at everything, clean things up, and just make a stronger foundation for the future when the market does come back. Would you agree with that?
100%. That's exactly what we're doing. I mean, it's paid off. It's been great. One of our properties right now, we wish we wouldn't have neglected it for as long as we did. I mean, not neglected in a bad way, but now we're going through, we're replacing all of the decks and staircases throughout the entire building. Just little things like that. We have the time, we have the resources to do so. It'll make the property look way better, way safer, and it's going to be a great thing. And that's something I don't think we would have been able to do if we were so busy looking at all these new deals, new opportunities, focusing on growing. Instead, right now, it's, hey, let's grow what we already have in that way.
Yeah, I say it all the time, and I'm a true believer. You got to slow down and speed up. You can go with your head chopped off for a while, but at some point it catches up to you. And or if it doesn't catch up to you, that's good. But you still have to slow down before you can take that next leap and really clean up what you've created, or else you're just going to always have a kind of a cluster of a business going, and it's never going to be something that you can step away from, in my opinion. You'll have to always kind of manage it or deal with headaches, versus right now you can slow down, clean all these headaches up that you've had in the past couple of years, and just get prepared for the future and hopefully put better systems in place for the entire team and learn some stuff, right? I think there are a lot of learning opportunities right now where we can say, wow, we actually really missed the mark on a couple of these deals. We thought we made a bunch of money, but the reality is sure, we made the money, whatever else, but we could have been so much more efficient if we would have done this or if we would have done that.
Yeah, 100%.
So learning right now is good, and just looking back at the previous years, I think is key for most people to go do. And I know a lot of them are, but a lot of them still aren't. We'll see what happens. In regards to, you brought up changing buildings over, essentially, so conversions, right? Let's talk about that a little bit. So a lot of people are out here. I mean, you see it all over social media. It's kind of annoying, honestly, but people keep talking about, oh, we need to convert this building to this use, and we need to convert this to that, especially in these bigger cities like New York, Austin, LA, where they have all this office space. Everybody's coming out saying, well, we need to change all these offices to multifamily or to apartments or to condos. Let's hit that a little bit, because I know that you've looked at a few buildings, especially here in Kansas City. How complicated is it to change an office building over to multifamily?
People don't get it. I mean, changing an office building,
put simply, you don't get it.
Yeah, I mean, it's unbelievably challenging. The biggest challenge for it is the plumbing in the bathrooms. An office building doesn't have that many bathrooms, and if you're going to change it to apartments, you basically need to run all new plumbing, all new pipes, everything throughout the entire building. That's really expensive. We've looked at some deals where even if hypothetically the seller would give us the property for free, we'd have the land, we'd have the building, we still couldn't make the numbers work for how much it would cost to convert it to apartments, what we could get for rents, all that.
It would be cheaper to scrape it and redo it.
Yeah. Well, the craziest part is, like, yes, is the actual real estate on some of these properties perfect? I mean, a great location, all that, or a awesome building. Is it worth more than X amount of money? Probably, but it's not if the numbers don't work. If you can only rent 100, you get 100 units out of it, you rent for $1,000 a month. Let's say you have an NOI of $1 million. Well, an NOI of $1 million at 6 cap. Well, if you're going to put 20 million into it, those numbers don't work. You're going to be underwater. And so it is challenging for sellers to realize that and be like, dang, like my building's worth nothing as being able to sell to a multifamily. A lot of people think, oh, it's now worth more if I can sell it as a conversion play. It most likely is not. If anything, it's worth less because you're going to have to put so much money into it. We've looked at hotel conversions. That's definitely a little easier. You basically just rip out one wall between 2 hotel rooms, and now you have one bathroom becomes your kitchen. But even still, if you have to go in and buy it for 10 million and you have to put 10 million into it to convert it, but when it's done, it's going to be worth about 18. We'll do the math. You're in for 20, you're out for 18. Who in the right mind would do that?
Well, I've seen a few deals here, even in Kansas City recently, that people are belly up on some of these things they've tried to convert over by a lot of money. I mean,
there's a deal, downtown that's like that. It's not good.
They've put about double what they're going to get out of it into it.
Yeah, awesome building, but I mean, great conversion. Props to them. But I mean, they're going to lose a lot of money.
Yeah,
that's why it's really, really, really important to be uber conservative on your underwriting. And that's one thing that Spencer and Chandler have preached to me is, let's be uber conservative. If you think we can get $1,400 a month in rent, if we buy this thing, let's underwrite it at $1,200. If we think construction costs is going to be $10 million, let's throw in another $2 million in reserves and just see what those numbers would look like hypothetically if that happened. You need to have the upside, right? You need to make sure that even if things don't go exactly according to plan, that both you as the GP and the investors can still come out of this thing profitable
or all safe. Yeah. Being responsible with your own money is obviously key.
Way different than being with somebody else's.
Yeah, even more importantly, you got to be even way more responsible with other people's money. So when I hear all these people talk about wanting to raise money, capital, but then I'm looking at some of the deals they're offering out there, I just can't believe it. It's almost sad to see the way that some people just don't care, and they are literally in it for themselves, just trying to make.
I mean, I've seen tons of groups that are basically just in it for the AC fee.
Exactly.
They're just trying to find deals because they're getting $100,000 acquisition fee, $200,000 acquisition fee.
Yeah,
they don't really give a shit if they make the investors money or not because they already got paid, which is the exact opposite of our philosophy. Our fees are lower, but in return, we want a bigger piece of the pie because we're right along with you.
Yeah, and that's kind of how we've structured in the past is the fees. We don't necessarily have fee on acquisition. It just really depends deal per deal, but we're gonna make our money on the back end when we go to either sell this thing, because we're gonna own a bigger piece of it, like you guys are doing, and we're gonna make our money. So we try to be the developer, the broker, everything on deals, and hopefully the GP, sometimes co-GP, but we don't want to have to charge all these additional fees to our investors if we don't have to. And that's always key for me, is how do we save as much money so everybody can make a little bit more, and then we can go do a lot more deals together. Because once you do somebody good several times, they're going to start hopefully becoming more comfortable in giving you access maybe to a little bit of a bigger check for that next project, and then a little bigger for the next project. So it starts.
Almost all of our investors are in more than one of our deals.
See, yeah, that's key. When you start having that, when you're when you're
just
closing
compound and keeping, and a lot of the other great part is then when we go to sell, they're like, well, can I just keep it in there? It's like, yeah, staying in the 1031, they trust in us, they believe in us. And that's why I love working with these guys. I mean, it's awesome to be able to represent their name right now. And then hopefully over the next 30, 40 years, I get to be more of a part of that and show that I'm there too.
Well, Zach, I think you're going to be a force to be reckoned with in the multifamily and just commercial real estate space as it is. I mean, you're 22 years old already, talking like you're a veteran in the space. So kudos to you, man.
I try to act like I know what I'm doing.
Yeah. Well, I'm just curious. So young in the space, what motivates you?
So I actually tweeted about this the other day. There's a lot of things that motivate me if we want to get down to the nitty gritty, but the biggest thing is for my future family. To be honest with you, I've had a long-term girlfriend. We've been together 5 years. One day we'll start a family, have little kiddos running around, and I want to do this for them. I'm not necessarily doing it for a monetary number or a boat or a house. Some people do it for you. I always see that on Twitter and everything, but I'm doing it for them. I want my kids to have a great life, have a father figure that's around, a good influence, a good leader, and look up to me. And that's my biggest motivation. I mean, sure, you can get all the toys and knickknacks and stuff that you want, but I've always just been a super competitive person. I just want to be the best at what I do. And I really think that that's doable. There's no end goal for me. People ask, where do you want to be in 10 years? I can't even fathom where I could be, because I do know that I'm in a really, really awesome position with these guys at 22. I mean, 10 years from now, I can't even put it in words.
Yeah. Your knowledge on the space already.
Just the bigger picture for me.
Yeah.
It's all bigger picture.
You're in a great spot. Yeah. Oh, absolutely.
You don't get into real estate for the quick money. You're in it for the long game. And that's what I'm here for. I'm here to build an empire with these guys.
I love it. No, I think you've got a great foundation started, and you've got a long way to go. I mean, I just turned 33, and hearing you talk at 22, I'm like, man, I wish I would have got in 10 years earlier as well.
One wishes they got into real estate later.
Exactly. No, you're doing it right, man. Well, hey, couldn't thank you enough for coming on the show.
Thank you guys. Absolutely. Thank you so much.
Hopefully we'll do a few deals together here in the near future. But before we end the show, though, where can people find you on social? We'll also attach it into the show notes, but kind of tell us where people can look you up and find you.
Yeah, so super easy. All of my social media is my name, just Zach Molzer, ZachMolzer. I'm big on Twitter, trying to grow my presence on there. LinkedIn, same way. And then for the company Apartment Investors, you want to learn more about us, you can schedule a call with us to chat more about kind of what you're looking for, what we look for in an investor. You can go to apartmentinvestors.com. So that's apartment and investors, one word, .com, and set up a call with us through that and chat with us, see where we could go. But no, seriously, awesome. Thank you so much again. Yeah, looking forward to being in this for the next 40 years and doing some deals with you guys. We'll get something done. We got a long time.
That's the goal, man. That is the goal. Yeah, we will do something here sooner than later. So especially both being here in Kansas City, we can definitely make something happen. So thank you everybody for listening. Zach, again, thanks for coming on, and we will be back soon.